Investors and traders, welcome to the channel Market Chart Pattern. Today is 23rd of July 2023 and I wish everyone is having a wonderful weekend. In this video segment, we are going to take a look at the key US stocks. Mainly these will be the US tech stocks, and this is what we cover in this segment. This video is for educational purposes only and it is not a financial advice. New subscribers to the channel, thank you for subscribing and welcome to the channel. Old subscribers, thank you for watching the content. Okay, so what we are going to take a look at is the daily chart of Netflix. The long-time subscribers, they will know that we have this pink shaded area drawn weeks in advance, and we were looking for the market to perhaps go and reach roughly about $500 per share level, but to be precise, we had actually mentioned $490 per share level. That is what we were looking at, and the market actually went as high as $485 per share level, so within the $5 range. I believe, in my perspective, it's pretty good. Do let me know in the comments. Okay, so at one point we were looking for that maybe it was going to do an ABCD correction to the downside, but once the market actually got its support from this level, which is a 38.2% Fibonacci retracement, we began to look at some upward resistance coming in from 61.8% Fibonacci retracement. Once that was taken out to the upside, that is when we began to concentrate more on this ABCD pattern, which could take the stock as high as to the $490 per share level. Although at that time it did seem that it might be highly unlikely, but there we are, $485 per share level. It just exactly came very close to that level. So this is the power of the patterns, and also to believe in your own analysis as well, and this is what we like to do at this channel. We come and spot these key pattern formations and try to decipher what the market is likely to do. Now, after having met this, look, the next trading day, there is on the Friday 21st of on the Thursday 20th of July 2023, there is like a big gap lower, and on the Friday we had a follow through. So that is quite a fair amount of selling coming in. It's possible that market actually coils back in, try to fill this gap up here, maybe even try to go and touch this $490 per share level, right at the 61.8% Fibonacci retracement, and also the completion of the ABCD pattern. But I think we came fairly close to that level, and just looking at the price action, could it be beginning of a more serious pullback or a correction, as you would like to call it? That is possible. The kind of signs that we would like to see is this was the kind of the correction that took place roughly around here, and here in this move higher. And if we just try to project it from here, what we have seen is that we have already exceeded that. So that is one sign. The second one is this is the bigger correction that we have in this one-to-one projection, which we like to call ABCD. Actually, why not we go ahead and type it out. So that's gonna be A. Let's make it a little bit bigger, so maybe 28. Size will do. Then that is our point B. This is point C, and let me actually make it like this. And then that is our point D. I can just mention that here. Oops. Here we go. D. Okay. So in this leg, the next big correction is about this much. So what we like to do is we like to take a look at a concept called market symmetry, which means markets like to repeat over and over again. And if we just take that and try to project it from this top, then the next key level to be watching is right around where we have this structural support, quite close to that, but around $390 per share level. And if we just draw a Fibonacci retracement of this CD leg higher to this level, we have a 38.2% Fibonacci retracement coming in at around $409 per share level. And let's see where we get the 61.8%. That's the next one we'd like to take a look at. That comes around this $360 per share level, roughly speaking, which is where we have this structural support highlighted in this yellow diamond shaped figure as well. So these will be the first signs that we will begin to watch. First of all, we have already seen that this much correction, the market has already broken below that, which is an indication that perhaps a bigger move, in a corrective move perhaps, is underway. And the next kind of levels that we should watch for is obviously this $409 per share level, which is the 38.2% Fibonacci retracement, and a little bit of support maybe from the structure right here. If this one gets broken down, then we are really looking in this zone, between 490 and 390 and $360 per share level. That's gonna be the key zone to watch. So this is what we are watching for in the stock of Netflix. Let's take a look at Meta. So Meta is formerly known as Facebook. So we began to get bullish this stock once the recovery began to break out of this $200 per share level, and the reason is that that was the 38.2% Fibonacci retracement from all-time highs reached by Meta to right this level, and this level is nothing but the 78.6% Fibonacci retracement going to its IPO days back in 2012. I think I might have that a little bit more clearly defined on a weekly chart. We'll actually also take a look at that, but what we were initially looking for was the completion of this ABCD highlighted in pink shaded region, and in fact that was met and exceeded by a fair amount of margin, because that level was coming around $270 per share level. The market went as high as $317 per share, roughly speaking, so by a fair margin, because the momentum was that strong. The momentum is still positive, with the exception of last Friday. What happened, this blue line is a 20-day period moving average, which is above the 200-day moving average, but the price has just closed right at this 20-day moving average. So we'll have to wait and watch and see what the price action might look like on next Monday. And given that it's also a Fed week, we'll have the FOMC results come out on next Wednesday. The next Wednesday, Thursday, Friday could be pretty active days in the market. So those will be the next key trading days that we should be watching for. Now, one of the key things that we like to watch for is the market symmetry. So in this move higher, we have this much of a correction before, and if we just highlight that, we're pretty close to that. If we begin to break down, then that is going to be an indication that maybe a further move lower in prices is possible. So this is what we're looking at in Meta. Let's take a look at in fact Tesla really quickly. So I've done a video on Tesla alone, so I would actually encourage you to watch that video. I just want to quickly show you this key pattern formation, which we had targeted projected in advance. We met that, and the price has rejected to move higher. So watch that video. I'll put a link to that towards the end of this video as well. Let's take a look at Amazon. Met our target of this 132 right at the 78.6% Fibonacci retracement. Is just going sideways after that. Let's take a look at Apple. So Apple has met and exceeded our targets by quite a large margin, and it's just going pretty much sideways in my opinion. Now it's just really touching this 20-day moving average. We should wait and watch further in this price action. Maybe there's gonna be some sort of a pullback also coming in this stock as well. Then the other one we like to take a look at is the Shop, which is Shopify. Shopify is moving in a really nice pattern of higher highs and higher lows in this channel formation. It found resistance from this channel. Let me actually just draw this right here. At one time we were looking for, perhaps when this happened right here, it could move and touch this lower end of this channel. didn't take place, that possibility still remains. It's hugging its 20-day moving average. Let's take a look at BABA. So we had done a separate video about BABA. As long as this 61.8% Fibonacci retracement is held actually in terms of support level, there's a possibility that this is moving in an ABCD pattern higher and could in fact go up to $140 per share level. Let's take a look at Roblox. So Roblox, as long as this C level will hold, there's a possibility it might actually be moving in an ABCD pattern higher, so could reach anywhere between $56 to $60 per share level. So these are the things that we are watching in these key stock. I am just trying to think any other stock is Microsoft. Okay, so the Microsoft is also very interesting. It has met and exceeded our targets. We had $322. It went as high as $365, taking out these all-time highs out. So that's good for the stock, but now it's pulling back, really hugging its 20-day moving average. Moving below that, I think we could change a few things for the stock, so we'll have to wait and watch, and maybe, as we are also seeing in some other stocks and overall major indices, there could be a possibility of some sort of a pullback in the stock. The key levels will be to watch the $320 and $310 per share level. So guys, this is what we are watching in the key US tech stocks that we follow, and thank you very much for watching the video. I wish you good luck and good trading.